A common question that a lot of people have is how long can you stay on your parents' insurance policy? And there's about 10 different ways that this can go, and we'll go over pretty much all of them in this video to kind of explain the situations where you can, you can't, and you might be able to. Let's dive right in and explain when do you have to come off of your insurance policy for your parents. To make the shortest answer, there's technically no legal limit to where you have to be or not be on your parents' insurance policy. Yes, when you turn 16, the rules and the guidelines state that if you are driving and you have a license and you live in the house and you don't have insurance, then you need to go on to their policy. You're a risk. If some emergency happened, you had to jump in the car, drive someone to the hospital. Those are some of the situations amongst many. For that reason, insurance companies are going to require that anyone that doesn't have their own insurance that lives in the house is on that policy. But then let's say you get your own vehicle and you want to start driving yourself. In almost every scenario, you're going to have your parents insure that vehicle. The only time where you're not really going to do that is if your parents either A, have tickets and accidents, or B, you're planning on moving out. And in all honesty, if you're going to move out or you're going to want to kind of build your own credibility, you really want to have your own insurance policy anyway. Now, that sounds all great, and thanks for telling me, but Mark, it's expensive. That's the caveat to that. So if you do go on your own and you're younger than 25 years old, you're going to pay a lot more than you would if you went on your parents' policy. I'm going to explain more of that here in just a moment and the costs and things that get more direct to give you some more details. We'll get a little bit more in depth on that here in just a moment. But let's say you're 45 years old and you live with parents, or vice versa. Parents live with you. Can they go on your policy? The answer is yes. Most to almost every company will allow it if you're in the same household. If you're not in the same household, there are situations where you can do this. It's dependent on the company. So there are a few companies that will let younger than 25-year-olds be licensed and drive in a different location. It's called the alternate garaging address or zip code. What they'll do is they'll allow you to insure somebody that's kind of getting on their feet, that needs help, and you're willing to take the responsibility of having them on your policy, but it's not common. That's actually the least common situation that I've seen in the past probably decade. What you do see very often is if you have a student that goes away to school and they need to have insurance as well. It doesn't matter if they're in a different state. It doesn't matter if they go off to a local area. Typically, if they're under 25 and they're a student away at school, the parents are allowed to insure them because they're legally responsible for them. They are still the legal guardian of the student. In that case, the insurance will still stick with mom and dad. If the student is actually moving there and they're going to go to school, but they live there and they're the registered owner on the vehicle, they can take that policy elsewhere. Well, why would you want to do that? Well, for example, if you're in Michigan, our rates are really expensive. If you're in Florida, if you're in Texas, if you're in Louisiana, those states are really expensive for car insurance. If you're going to school in Tennessee and you're going to spend the next 6 years and don't plan on moving back, and you can afford to do it, honestly, being a young driver in a state like that or in a less expensive state is going to be cheaper than the states that you have here. Keep in mind, a lot of times it's not just the price because it's a cheaper state. Sometimes you're losing coverage from going from one state to the next. Great example is I have a customer I just wrote a policy for that moved from Minnesota to Michigan, and the medical went from $40,000 to unlimited. So they chose an unlimited plan, and honestly, it was about the same cost. The nice part is going from the one state to the next, it's always worth it to check what options you have. Going back to the 46-year-old or 40-whatever-year-old on parents' policy or vice versa, one of the biggest key factors to this is who owns the vehicle, who's the registered owner. So there's a couple ways you can do this, and you can switch it up any way you want. So if you are the registered owner of a vehicle, technically, most loans, and this is not the insurance piece, most loan companies will require that you're the primary owner and you're the primary insured. The primary insured is the first person that goes on the policy. You're the one that can make the changes, you can cancel the policy, you can do anything. Where if you're just a driver on someone's policy, you don't have the rights to make changes to that policy. Doesn't matter if you own the car, the insurance is under a primary named insured's name, and so because of that, they have all rights and not the drivers. If that's the case, you have to get your own policy. Now, what I said just a minute ago is that you can mix it up. So if you do have that situation, you could co-register the car to somebody else. So if mom and daughter or dad and son or whatever the case is, person and younger, you get the point. It's somebody and somebody, right? So the primary and the non-primary can co-own the vehicle and co-register it. Now you both are allowed to become primaries. The biggest piece that you need to be careful with in this situation is if you do co-own a vehicle, then technically the other person could go off and sell the vehicle. The title should have both your signatures, so you both are supposed to sign on it, but no one's going to stop the other person if they're doing that. It's only if you have a loan in that case, in most cases, that it's going to necessarily cause a problem. So you have to trust the person that you're co-owning a vehicle with, plus your credit is tied to that vehicle. Now that it's tied to that vehicle, if your friend or whoever you co-own the vehicle with goes off and bankrupts the car or crashes the car or does whatever the case is and it hurts the credit, it hurts your credit just as much as it hurts theirs. Let's pretend that wasn't a good fit and we don't want to do the co-ownership. Some companies, like we said, will allow you to have the other person, the registered owner. 9 times out of 10, if it's a daughter, son, sibling, if they're in the same house, they won't care so much about the registration. You will find sometimes very little is that they will. So if they do have it registered to them, they can't necessarily just put it under your policy because you are the primary named insured. I have not come across that in a few years, but I have heard and seen it before. So just keep that in mind if you do have that situation. Maybe talk to your agent and see if that's a good fit. Well, Mark, what happens if I don't tell them? I just keep myself on my parents' policy and I move out of state. This is an exact situation I just came up with recently. Here's what could happen. Technically, it's a gray area, right? You have to read the guidelines of the insurance company. Most of the time, and I would expect the insurance company to have some clause that says if it's not properly insured, that's rate evasion. Whether you do it on purpose or not, it doesn't negate the fact that you did it. And if you take the vehicle, move somewhere else, let's say you move to a different state, you're the owner, but you're still insured under mom and dad's policy. Mom and dad are paying the bill. They don't care. They'll let you pay the bill until they find out that you're no longer in the state or in the household. They'll likely remove you in the vehicle from that policy. They'll usually give mom and dad a couple days or something to actually get you off and have you on your own because they don't want to just leave you hanging, but they have the right to take you off that policy if it's not a situation that they're allowing to be insured. They've set these rules up front. It's not a trick. It's something that they tell you ahead of time that if this situation comes up, they have to get their own policy. If you do have a claim, let's say in a different state, and you're still on mom and dad's policy, they could technically deny that claim because it was a rate that wasn't factored in. That being said, this is why we say it's kind of a gray area. There are some states that have made the insurance companies still pay the claim, but they were allowed to go back and re-rate and collect the premium for what you would have paid in the other state. That's the risk you're going to have to take if you do decide to go that route. Is the one car that you have a $20,000 loan on it might not be covered at all. You might just be driving around with a nice piece of paper. Policeman, if they pull you over, isn't going to say anything because they're not involved in that piece of it. It's the insurance when there's a claim is when you're going to find out that that could be a major issue to where you're not actually covered when you thought you were. So what are the pros of staying on your parents' policy? Should I even debate that? Why don't I just go get my own? Like we said before, if you're younger, it's going to be more expensive. But here's why. The parents have the history, have the credit, assuming that they're in a good scenario, have no claims if that's perfect. That's the perfect scenario. If you've got a 50-year-old parent, they're getting a discount for that. If they own their home in some states, they're getting a discount for that. The risk is lower because they're typically probably it's more up and running and they're in a location that's not as risky. Versus me going off on my own, I go rent a place downtown, right? I love it. It's great. But there's more claims, more problems. So those situations, insurances look at that. And so you've got your primary named insured, the vehicles, and then you have the extra drivers where you're pulling in all of those discounts that they're getting. That's the major benefit where you're going to save hundreds of dollars, if not yearly, a month. The best way to decide that is to check on your own. Sometimes it doesn't make a price difference, and you are better off doing your own insurance, especially if mom and dad have tickets, have accidents, and just have a bad history. If their insurance or credit score is not great, then it could be hurting you as well because you're following their profile. If you are interested in looking at different insurance, I'll put a link in the description below where you can check that out. We work with multiple companies that do shop around. If it's not in a state that I'm licensed in, then we'll typically refer it to another agent that does the same scenario. Don't forget that there are discounts for doing both. So if you go off on your own, the multi-policy discount is going to give you the best deal if you get some sort of renter's policy. A lot of people don't realize that sometimes it's actually less expensive to have those two policies together than just have car insurance alone. So always check both options in case it's a price factor, but you should want to have it anyways because it protects you outside of the vehicle. There's a liability portion to it that we'll get into in a different video. If you are a safe driver, you're going to get a safe driver discount if you've been insured, whether it's under your parents' policy or yours, as long as that vehicle was tied to you on that policy, or if you didn't have one, still counts. You get the safe driver discount, you get the claims-free discount if you haven't had any claims, and you can also get the discount for longevity. The longer you've been with an insurance policy, the better deal it is to go to another company. They want that longevity to pass over to them to where they can insure you for 5+ years and keep that customer for longer than expected. There's a ton of other discounts as far as affiliations, and I'll link a video at the end that goes over some of the discounts so you can kind of check those out. If you are undecided, the biggest thing to think about is what is going to be the best fit for your situation. There's probably 20 more other ways that we could go in depth, and I don't want to bore you in this video. Put them in the comments below if you do have questions or situations that you want me to answer, and I'll try to get to those as best as I can. Most cases, it's worth it to be under parents' policy, especially if you're under 25. Hands down, if they have good history, good credit, then they're likely going to be the best cost option. Even if you purchase your own car, most of the time they'll let you go under that policy. The moment you move out or the moment you hit 25, you may want to debate whether it's a fit for you anymore. In that situation, I would at least check and see either A, can you go with that other company? And yes, they're going to be aware, and now there's a flag on your record that says you may not be a fit for them. But like we said before, you're just buying a piece of paper now because they're technically not covering you. If you're looking for the best prices, deals, discounts, I recommend checking out the overall discount video that I made here. It's going to go more in depth on what we just kind of mentioned. If you're new to insurance and you're just trying to learn the whole ins and outs of what coverages are good for you, I'll link my Car Insurance 101. Feel free to browse the channel. There's tons of stuff, home, auto, anything related to insurance. Just go to the home page and you'll see what the popular options that people have found. I'm Mark with Think Insurance. I'll see you in the next one.